Welcome to the FocusIR Fireside Chats with me, Carl West. I will be bringing you interviews with fund managers, economists and analysts. Plus, we'll be sitting down with the founders, directors, CEOs and company chairs that make things happen in the boardroom. I hope you enjoy the show. Welcome to FocusIR Fireside Chats. I'm joined today by Charles Jillings, Portfolio Manager at London-listed Utilico Emerging Markets Trust, which has a market value of just over 500 million and, as the name suggests, is focused on investing in infrastructure and utilities in emerging markets. The trust is run by ICM, of which Charles is Chief Executive, and I believe the trust is part of the FTSE 250. Charles joined ICM in 1995, established ICM Investment Research in 1997 and ICM Investment Management in 2015. Charles has more than 30 years of experience in international financial markets with extensive experience in corporate finance and asset management. He graduated from the University of Cape Town and qualified as a South African Chartered Accountant in 1980. Charles, welcome.
Carl, thank you for having me.
What would you say to those who think that because you're focused more on infrastructure, utilities and similar sectors, that means that you're more of a defensive holding, given that returns are more closely correlated to economic growth rates than stock market valuations?
I would say on the one hand, you're correct. It's defensive in nature, and that's borne out by, if you look at the portfolio, a very low volatility and in technical terms, a beta of 0.8, and that's just a characteristic of the investments we make. But I would say to anybody, if you look underneath, we're meeting the demands and expectation of urbanization and the middle class, and that produces really strong growth, especially in the emerging markets where your underlying drivers are very strong. So it's anything but boring. It's an exciting portfolio that has performed extremely strongly over time.
Yeah, as you mentioned, it's a strong portfolio. Let's delve into that a little bit. So what would you say is the sort of ideal Utilico investment? What's been your best performing stock and why?
So my best performing stock, and the one I use as a reference, is International Container Terminal, which is a container terminal operator listed in the Philippines. But what do I like about them? Absolutely fabulous management team. And they built up a portfolio of ports. So they now have a holding of 33 ports across 19 countries, 6 continents. And that gives them diversity. But the real driver for me is they are benefiting from economic growth. So as countries' GDP grows, so containerization, which is an output, increases. So they have had strong revenue unit growth. They've been able to then push prices to the upside. And so if you want capture a strong revenue growth, and then they've paid attention to cost, and it's remarkable the EBITDA margins that they're achieving. And if I unpack that in just terms of financial performance, volume growth over the last 5 years have been just over 7% compound. If you look at revenue growth, it's been just over 16% compound annually. And if you look at EBITDA growth, that's been closer to 20% over the last 5 years. So they've doubled EBITDA over the last 5 years, and that's a remarkable achievement. I think if you want, disciplined approach is the key feature that makes them attractive, but the ability to add ports as they've gone along has accelerated their performance, there's no doubt. And it's very exciting to see they've just added the Port of Durban at the back end of last year. So that's going to accelerate, if you want, the performance for this year. So they remain in the portfolio. They've been there since day one. They're number 2, and I don't see them shifting, if you want. But to note, each unit that goes through these ports, each container drops to the bottom line. Their EBITDA margin is somewhere around 65%. So 65% of everything that they earn drops into the EBITDA, and that's just a fantastic performance.
Yeah. It sounds to me like what you're describing there is consistency, stability. I mean, all of those things, I'm guessing, you will see that as far from boring, really. That's the kind of bread and butter, really, for a fund manager, isn't it?
It makes life easy. And to watch them perform through COVID, watch them perform through real challenges in the wider market, and concentrate on the things that they can, if you want, influence, has made it a fabulous investment.
Yeah. Just looking at the Utilico portfolio, you have a lot of investments in Brazil. I think 3 of your top 5 are from Brazil. Why is that? What's the attraction of Brazil particularly?
We're bottom-up investors. I have an absolutely fabulous management team that has been with me, a number of them, since inception of UEM 20 years ago. I think our understanding collectively is very high. So we are very much bottom-up driven. And Brazil's an outcome. What do I like about Brazil? There is strong, if you want, investment-led government projects, and they are constantly auctioning toll roads, auctioning, if you want, transmission lines, auctioning ports, and all of that feeds through to our portfolio. And if our investees can capture that raw growth, that makes it attractive. I think the other thing about Brazil is, 20 years ago, emerging markets was probably fragile. Today it's not. It's borrowing in local currency. It's built out so much infrastructure that it's able to capture the upside. And at the moment, with commodity pricing going up, and they're long almost any commodity, be it iron ore through to soya, but more interestingly at the moment, oil. For a country that generates a lot of its energy from hydro, it's long oil, which is going to be, an export benefit.
Yeah. Charles, if you wouldn't mind, could you just talk us through what you look for when deciding whether to bring an investment into the portfolio? Are there any big picture investment principles that you have to satisfy in that process? And if so, what are they?
So I think the characteristics are, it needs to be listed. Our unlisted portfolio is now down, I think, just under 2%, and it'll probably shrink to 0. And that's a conscious decision. So today it needs to be listed, needs to be operational. So I don't like, and I don't know why I always beat up on Mumbai, but I don't want 10 acres in Mumbai, go and get planning permission, go and build a power plant, go and demonstrate you can operate it. We much prefer an operating business. They may well be expanding, they may well be adding a runway, adding a new toll road to their portfolio, but they are operational today.
So it's not a greenfield project, jam tomorrow type thing?
Not at all. And strong management. We need to be able to hold management to account. We're not on the ground, we're not there day to day. We need to understand that they understand how to operate the asset and what the levers are that they need to pay attention to. So strong management. And then I think at a high level, confidence around the legal framework, confidence around the regulatory framework, confidence around who our investment partners are. And there are some jurisdictions we've shied away from over time because, in my language, it's a challenge to maintain the ownership and outcome discipline that you need for a portfolio like ours.
Yeah. So could you give us some examples there of where you have turned your back on some jurisdictions? Where do you tend to, you know, shy away from?
So we would shy away from a lot of historically Eastern European, so Russia in particular, because it's just too difficult. But we've not had over time a lot of investments in Africa. Why? They're not listed. And although the markets there are certainly developing at pace, and we keep an interest in them, there's still no listed airports in Africa. There's still, huge gaps in their infrastructure, listed investment opportunities.
Yeah. So again, just thinking back to what you just said, so you're looking for businesses with a track record rather than a blank sheet of paper and grand promises. How much of a track record kind of would make you feel comfortable? Are we talking about something that, I mean, is there a time frame that you look for, say 10, 15 years, that you'd like to see, operational, good standing, good results, etc.? Or is it different for every company?
I think it's somewhat different for every company. I think some of our successes have been around identifying management team changes. You can see a fabulous asset very often being destroyed by just poor management practices. And you'll see a change in shareholder, and that change in shareholder brings with it a change in management, change in discipline, and we can get on board very quickly, because the one thing we know is how these assets operate, what their shortfalls are, what their, if you want, challenges are. It's the management team that's the key. So we can get on board very quickly. Would we back a brand new management team with no good shareholder behind them, et cetera, question. We might shy away. We might say, come back to us in 12 months' time.
Yeah. Have you been at a point in the time that you've been doing this where you back the same management team that that you've dealt with previously, but have since moved on to a different business that you're considering investing in, and how much influence does that exert on the decision making?
I think if you can find somebody who is able to apply disciplines, you can gain confidence. One of the things I don't like is conglomerates. So we need to make sure that they're sticking with the nature of the asset that we're looking for. But we are backers of ICT, which I've talked about in the Philippines. The same family who stands behind ICT is now an investor in Manila Water. We invested in Manila Water because you just know that they'll focus on the cost, which is the key issue in driving value to the bottom line in that concession.
Yeah. Okay. You're known for offering strong dividend growth over time. How did that come about, and why is that important to you and to Utilico?
I think if you unpack it, because they're operational assets, they generate a cash flow. That cash flow enables them to pay a dividend. So going into an investment, we'll pay a lot of attention to capital discipline. What are they going to do with the cash flow that they are generating? And in my language, if they go into something that we wouldn't want them to be going into, we just wouldn't invest in them. So I've had an investment in a water company who were very proud that they'd made an investment in the regional bank. And I'm like, that's not for us, so we're out. But so we're looking for, operational assets that are driving cash flow and that will pay the dividend out the other side. So today, 80% of our portfolio pays a dividend. Why doesn't 20% pay? They're building their asset out or extending it, so diverting a cash flow into future growth. And obviously, we would expect future dividends. But the 80% allows us to pay a rising dividend to our shareholders. And I do know and fully understand the expectation of our shareholders around a dividend payment. And certainly the board has made it one of their core tenets to be paying a progressive dividend. I'm particularly pleased that our dividend over the years has been covered, even through COVID, when, if you want, there was some hesitancy around cash management and cash discipline, but our portfolio paid out, and we've had a rising dividend now. And we've gone into the AIC's dividend heroes. I'm really pleased about that.
Yeah. For that 20% of the portfolio that currently don't pay dividend, what's the contact like between yourself and management about when they intend to kind of finish that investment phase and to restart paying dividend or to start paying a dividend? Is that a fairly frequent conversation that you'll have with them? Do you have a fairly clear, kind of predictor as to when the dividends will start flowing?
So usually, yes. I think I would always say to a management team, if you can aggregate assets which are going to deliver compound growth over time, why wouldn't you? If ICT turned around and said, look, we've got a fabulous opportunity, we want to cut back dividends, we want to invest in a particular set of ports, you'd be, why wouldn't you back them? I think there is a constant discussion that goes on between us and, if you want, the underlying investee companies. We travel a lot. I go to Latin America for 2 weeks. I go to Asia for 2 weeks. So I've just come back from Mexico, Brazil, and Colombia and Chile, all within 2 weeks. But we get to meet our management teams who, we deeply know and understand. We know and understand the assets. So there's a constant dialogue, and I'd like to think, and I say this to management teams, no surprises. Yeah, if you tell us the journey you're on, we can back you.
Yeah, absolutely. Utilico had a pretty good year last year. What do you think that was down to, and how much of an impact did the weaker dollar have on that?
So we had a fabulous year. NAV through December was up 20%. And yes, I think weaker dollar reflects part of it, but I think the wider story is investors looking away from or looking for alternatives to US exceptionalism. And I think EM was cheap. And I would say it continues to be cheap.
Yeah. How has this year started off, and how do you see things playing out in 2026?
So it started off strongly for us through March. First 3 months, NAV was up 5.4%, and it's been a good performance across the entire portfolio. Currency has been firm in Brazil. Markets have been firm. So it's been a fabulous start, but I think our portfolio remains undervalued and remains attractive. Straits of Hormuz is clearly a concern, and the impact, if you want, of energy and energy derivatives. But at some point, I think our working expectation is that's resolved, that the oil flows and energy flows. And if I'm looking forward, all of this should accelerate investment into digital infrastructure, AI, because we all know that's where the market is investing heavily. But we should see an acceleration into energy security, so renewables and transmission lines, all of which fit in our portfolio perfectly. And we should see an acceleration of diversification of supply chains. And again, with our ports and logistics and toll roads, it should benefit our portfolios. So I'm optimistic that countries will have to double down on these aspects in order to keep up and thrive, and our portfolio should be the beneficiary. So I'm optimistic. I think clearly, short term, there'll be some volatility. We'll take advantage of it. If a position goes down, we'll buy more. If it goes up, we're not afraid to sell.
Yeah. Well, you brought me on very nicely there, talking about the Strait of Hormuz. And my next question was, has the conflict in the Middle East prompted you to change or rethink your investment process?
No, I think one of the things that's been a real strength has been that the process is unchanged over 20 years. There are refinements. There is a lot more information around blocks of investment opportunity, but the process is unchanged. And we are driven by bottom up. So we need to build out a model that can give us a 5-year visibility on investment performance. We need to be able to challenge and engage management in that process. But the process hasn't changed. It didn't change through COVID, didn't change through 2008 crash, didn't change through the Ukraine war. So I'm very much, if something looks cheap, is cheap, buy it.
Yeah. So very much like the companies you invest in, consistency and reliability kind of are the name of the game, really.
Absolutely.
Yeah.
You've got to back your convictions.
Charles, just one final question before I let you go. How did you first get into the fund management and investment world, and what attracted you to the emerging market sector?
So I come from South Africa, come from Cape Town, always been an investor, always enjoyed understanding how markets work, capital markets. And after 10 years in corporate finance in the UK, giving advice, I turned around and said, I'm bored. I actually want to make the investment. I want to be on the investment side of the process. So stepped away, joined a long-term colleague of mine, and we've been together since 1995, developing ICM and our investment platform.
Fantastic. Well, Charles Jillings, thank you for joining me on FocusIR Fireside Chats.
Carl, thank you for having me.
Thanks for listening. Don't forget to hit that like, share and subscribe button on Spotify, YouTube or wherever you get your podcasts.